On a day like today, do you sit back and hold? Do you do some buying now that we are seeing the NASDAQ down more than 7% from the year and more than 10% off its highs?
Hey, Sarah, thanks for having me on again. I think that, when I think about what clients are doing right now, we've talked about, wage inflation and a lot of, bonuses coming through. Clients still have extra cash. And if you look at the alternatives, the alternatives aren't that great if you're sitting in cash. Obviously, you want to be careful when you're seeing a lot of sell-off. But I think, investors are now starting to look, and we're starting to look at those areas where the market may be dislocated. And there's been an overselling of certain high-quality names, especially when you're looking at some of the tech sector and some of the different growth stocks that have sold off significantly over the past couple of weeks. So we are starting to look at that. And obviously, if you think of the defensive areas of the market that have held up, and you mentioned energy on the show, obviously previously, and obviously financials is actually struggling as well. So I'm starting to look at those areas and starting to nibble. I think there still may be some sell-off in the near term, but there are areas in the market that you're kind of looking at, the valuation, how we've been re-rated, and that look really attractive right now, Sarah.
Mike, I wondered, just to go back to the start of today's selling, what the trigger was. Was it when Goldman numbers came out, or was it rates before that? Was it Europe? I mean, Europe had quite a big impression on sentiment this morning.
Yeah, I mean, I think it's all of the above, but I think it's mostly just sort of a ratcheting up of the same set of concerns of the overall markets repricing for higher yields. There's really a lot of rhetorical momentum behind, the Fed having to tighten more. And I keep saying this: we have this space to the next meeting, next week, and we're going to fill it with a lot of hot air about just how far behind the curve the Fed supposedly is. Yields are moving in that direction, and in a lot of ways, it's the market everyone kind of said we were going to have this year, which is rotational value outperforming, but maybe not absolute gains. Rates going up. The market has to make its peace with higher levels of yields. All those things pretty much are going according to plan. I'm sort of leaning back on the idea that the credit markets have massive issuance of corporate credit. The spreads remain very tame, so it's not really that much of a macro stress event just yet. It's much more just kind of an adjustment and a valuation compression, which people saw coming. But when you're in it, it feels like there's something badly wrong, and it feels a little more treacherous.
Are you referring, Mike, to Bill Ackman tweeting over the weekend that the Fed should do a 50 basis point hike, a double, basically? Yeah, I mean, he came out and he said they should do shock and awe. They're losing the battle on inflation. Right. I don't know. I don't know if they are losing. They might be losing the battle, but I'm not sure the credibility issue is the thing.
There's one way we can say whether they're losing the battle, which is longer-term market-based expectations of inflation are not moving very much. We have the yield curve is still in a decent shape. Long-term yields are at 1.8. If people thought we were going to be in for runaway 70s-style inflation, if the market thought that, I don't think we'd be here. So, I mean, I think that the signals are out there in terms of what the Fed is likely to do. Seems to me the direction of surprise might be toward the dovish side based on what they say in January, but at the January meeting, but obviously remains to be seen.
And I also just wanted to follow up on what you said about valuations contracting. We expected that. That's natural to happen in a time when we're pricing in some Fed rate hikes, but some of the weakness, Mike, 3% decline today on the Russell. Dow transports were down 1.7%, worst day since December, really breaking down here. A lot of these cyclical trades and even some of the value stocks are not working as well. So I wonder if there's a broader message about the economy.
Obviously there's a growth soft patch we're in as well. The Russell 2000 is, it's overweighted in financials, and I believe AMC is the #2 holding. So there's a lot of just low quality in there, and there's a lot of just beta. And what the market does not want is beta at this point. But you're right. It's the cyclicals can only go up so much if we're talking about relative performance. I don't think in an absolute way they can be a really aggressive upside engine for the overall indexes.
Delano, we were talking about various tech names that have been selling off of late. Talk us through one of the chip names that you'd be buying on weakness.
So I think, one of the chip names I'd be buying on weakness is NVIDIA. We talked heavily about, what they're still doing as far as the demand. I think a lot of the chip sector, the recent sell-off is kind of been oversold. And so we're looking at some of the chip names. We're looking at some of the mega cap names. Obviously, you guys talked about the Microsoft acquisition or the announcement of the acquisition, which was, Microsoft pulling a little bit back on that news. But just overall, I think, the the re-rating that we're seeing in the market, obviously, especially with the tech names, that's specifically been, priced in. A lot of it's been priced as far as the 4 rate hikes that we're respecting. And so now, my focus is shifting a little bit towards these names that I think I've seen a way of overdue selling pressure and where the best time for investors to get in. So that's the shift that we're focusing in right now, Will.